All right, charts masterclass starts right now. So I know a lot of people were curious about, me maybe making a video on how to read candlesticks, how to read charts, what to look for, what indicators to use, just all the basics. So let's jump into this. Now, every trader, depending on strategy, will have a different way of interpreting candlesticks. Me personally, I'm going to teach you the patterns that I trade because they're the ones that I teach on my YouTube, and they're very, very simple and beginner friendly. So, starting out with charts, time frames. Let me just make this a little bit bigger. I stick to mostly. So I know a lot of swing traders will zoom out. They'll be like monthlies, weeklies, yearlies, whatever. I use a 1 minute time frame when I'm actively trading and a 15 or a 10-second time frame. On the side, I'll have the daily chart and then I'll have the 5 minute chart. Reason being is because when I have the 1 minute and the 5 minute up at the same time, I can just verify that there is what we call multi-timeframe alignment. Now, just to put this in simple terms, it's just making sure that everything on the 1 minute time frame, as far as the candlesticks and chart goes, is in alignment with the 5 minute, right? There's no weird manipulation happening. There's no outlandish candles that shouldn't have been there that show, some big selling or maybe you just don't want to see anything that's not normal, right? So whatever the 1 minute shows, the 5 minute should show as well. And if there's something that looks like an anomaly, maybe there's some weird manipulation and maybe you don't want to be involved. Why do I use the 1 minute and the 15 or 10-second time frames? To put simply, I only hold my positions. 5 minutes might be the maximum time that I'll hold a position, which is why my entries have to be so crucial. I do not enter and draw down and then come back up. I enter, either I'm correct or I'm not, and I'm out. That's that. I trade what's called the micro-pullback strategy. Now, I did make a little simple artwork here. It's very high level artwork. Don't be intimidated by my drawing skills. So, assuming that this is the 1 minute chart, we get a stock that is squeezing up. I use the 9 and the 20 EMAs on my 1 minute time frame. We get some big candles up, we get a pullback. Now, often what you'll see on the 1 minute time frame is that our pullbacks will respect the 9 EMA. Typically, only tapping it, maybe dipping below it, having a wick, get bought back up, and staying above it. Sometimes it's not perfect, right? It's a chart pattern. It's not always going to be perfect. It's just candlesticks that are showing you where price was, has been, and will be going. So oftentimes we stay above the 9, just dipping under it briefly before being bought back up. That is a positive thing. Now I'm looking for these legs up. Now oftentimes, depending on the spreads, these two candlesticks could be anywhere between 20 cents from top to bottom, 50 cents, 80 cents, $2 even, depending on the spreads. So that's all you need really to make a lot of money with the right leverage. Even if you buy, let's say that this is a 50-cent move between these two candles, both 25 cents each on the 1 minute. So 50 cents in 1 minute, 2 minutes rather. And you buy with, a couple $1,000. That's going to materialize a very significant return. So a lot of people are saying like, "Oh, Swords, your live alerts, they're just too late. I can't get in time." No, they're not. You can. Even if this is already 40, 50% up. Let's assume let's assume that this here is 50% on the day. It's up 50% in just, a couple minutes. And I alert it because I see it's up 50% already. And I send the alert. You should be waiting for pullback, pullback, test of the 9 EMA or volume weighted average price. And then you're looking for this next candle that shoots up and you're buying on this black line right here. Okay? This black line. You're buying that. When it breaks over that top of the pullback candle, that's where you buy. Okay? Does that make sense? I don't know why this is so blurry right now. But your stop loss is then going to be the break of the 9 EMA or the break below the bottom body of the candle, depending on your risk tolerance. And also keep an eye on the clock while you're trading. Oftentimes, a candle will open up and it'll open up green like this, right? So we open, we shoot up, we close like this, and then you'll see the candle open here. Hold on, that's really bad. You'll see the candle open here, start to push up, and then maybe there's 10 seconds left in the candle before it closes. And let's say it gets pushed down, turns red, and does one of these, and just starts pushing down, and then it closes like that. You'll see that. So I want you to just watch the time frame with the clock in conjunction with the candle, right? So you want to be able to see, because fake outs will happen. People will panic. They'll see a candle open like this and start pushing down, but then it's within the first, I don't know, 10 seconds, and then it ends up closing like this, or it turns into a doji. Wow. Not that. It'll turn into like this, right? So for the people that are super new, that have no idea how candles work, I'm going to break this down for you. So here's a perfectly drawn bullish candle. Here's a perfectly drawn, flawlessly drawn bearish candle. So how to read these? Not paying for that shit. So I guess we'll just try to write. So this is the high. This is the low. So the wick is where the body of the candle was at one point. Yeah, so you have to understand, like, the wick matters. It's a big deal. Like, it's showing you where it was and where it has been, and it can give you an idea of sentiment. So bottoming tails are considered bullish because a candle is getting pushed down and then being bought back up. So just to finish this out, this is the close of the bullish candle. This is the open of the bullish candle. So this is where the candle started. This is where the candle ended. This is the high of the candle. And then this is the low of the candle in that increment, whether that's 1 minute, 5 minute, 10-second, daily. Okay? So the only spot that these are differing is this is also the high, right? This is also the low. But this is the close, and this is the open, right? So we open here, sell off to here. Very simple. I get it. Like, just jumping in, not knowing can be very tricky. Candlesticks were developed in, I don't even remember the century, a long, long time ago. Candlestick charts were developed to track rice futures, to track the price of rice futures in Japan, long, long time ago. It is a historical chart of price action, and once it is on the chart, it'll never change. So the reason that I'm telling you this is because just reading candlesticks alone is sometimes not the most beneficial. And I know a lot of people are getting into, liquidity sweeps and futures and algorithmic blah, blah, blah. See, to me, that's totally nonsense because, first of all, the idea that you can read liquidity sweeps and read SMTs and just use ICT concepts strictly, to me seems ridiculous because everyone can interpret it in a different way. Saying like, oh, so the way that they look at it is like markets move like this, right? Which is true. And, there's ways that they can allegedly consider this a buy side sweep. So I don't study this because I don't involve myself with other strategies, but people would be like, oh, here's a liquidity sweep has been taken at this zone, so now we're going to this zone. But it's like you can interpret it in any number of ways where someone could be seeing that it's a sell side liquidity sweep and somebody else could be seeing that it's a buy side liquidity sweep, which is how people make money in futures because people are torn, right? They're either taking longs, expecting the position to go up with like a stop loss here, or they're taking shorts with a stop loss here and expecting it to go there. In my opinion, it's way too open to interpretation. Just want to get that out there. So back to what I do. Let's hop on an actual chart. Okay, so the next thing I want to talk about is the volume weighted average price, which is the VWAP. Usually I use mine in orange. Now, this is really, really important. It's the volume weighted average price indicator VWAP. Beautiful. And the way that stocks move in conjunction with this is they ride it, they'll hit it, they'll test it, and they'll go off of it, and they'll test it, and they'll test it, and it's a serious level of support, even on the 1 minute chart. So what happens when we drop below it? We usually drop, okay? So then it's in the hands of the bulls. So you got, or hands of the bears. So you got the bears below the VWAP, because it's your equilibrium, and then you have the bulls, which is me, above it. So when we get below it, oftentimes you'll see that we kind of bounce around like this on EMAs, and the price action gets kind of shitty. But what happens when the volume weighted average price is here, and our stock chart was riding above it, broke below it, and we kind of hold like right here, right? And it's getting choppy, but we start to come back up. What happens here? Oftentimes you'll see we test it, dip, rip. This is what we call a VWAP breakout. On the 1 minute time frame, it happens very often. So when a stock breaks the VWAP, but it doesn't fully drop off the face of the earth and just dump, tied to it, below it, and they're kind of converging like this. When we do approach it, oftentimes we will break straight through it and go back to high of day. So that's something to definitely watch out for. When I'm trading, let's say this is the 9 EMA, this is the 20, this is the VWAP. Oftentimes that's how they'll be set up. And our stock is just, trading along as it should be. When we break the 9 EMA, it's usually over for me. The only time I'm willing to buy the micro pullback is if we stay above the 9 EMA. Another thing to keep in mind. But I'm not going to totally write it off, because if we break the 9 and we start to drop towards the VWAP and we hold the VWAP and we start to head back up like this, maybe I'll buy it. If we get back above the 9, I'm buying that. We're heading back to high of day, right? We're going to break that zone. Now, let's say, just for fun, that we're trading along here, blah, 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 and we break the 9, hit the VWAP, test the VWAP, break the VWAP, but we can do this, right? So now our VWAP's like here, our 9 EMA might have dipped down like this, and our 20 is probably just holding steady. The VWAP setup, I'm looking for the VWAP breakout, boom, there it is, okay? All in a 1 minute. Now, another thing to keep in mind, right, is like I said, watch the clock. If this is the VWAP, and we broke below it, and we're trading along, and we come up, and we break, immediately we break, but there's 40 seconds left on the candle. You might finish with what we call a shooting star, which is this candle. It's a bad candle. And if we break, and there's not enough volume to support the break, it might go above it really quick, and then in the last 10 seconds, drop it down and do this. Okay? So hopefully that makes sense. I'm going to deep dive into candles real quick. So specific candlesticks can send a message to you. They can give you a sign of sentiment. So strongest candles are obviously bigger, and they have no wicks, and if they do have wicks, they look like this. Very small. Okay? So that's what a strong candle looks like. And obviously that's the same for a red candle. These are your strongest ones. Often they're bigger than most. So, where can we see, more interpretative candlesticks? And also, when you see these, they only apply if the price action is doing this or this. If it's doing this, these don't mean shit. Okay? So, bad candles, small bodies, big topping tails. You might see these, which we call spinning tops. It's a candle of indecision. It had a very high high, a low low, and closed indecisive. You might see one like this. That's a bullish candle. Even if it's red, it's still bullish. It has a big bottoming tail, whereas that is very much bearish because it was pushed up and sold off, but this was pushed down and bought up. And these can also come in the form of a green candle. You can get a shooting star like that. You can get a spinning top like this. And you can get a hammer like that. We can also dive into dojis, which are candles that look like this, right? You can get all sorts of them, and they can also be red. So these are called doji candles. They are always candles of indecision, but if this happens at the top of a trend, so we're trending up, and then you get this, we'll likely do this. And the same thing goes here. You get a shooting star at the top of the trend, you will likely do this. But differently, if you are trending down like this, and you get a candle like that at the bottom, you'll probably go up. So all of these are just indecision candles. You'll see a lot of these in sideways consolidations. You'll see a ton of them because there's no volume and there's no actual sentiment of where this stock is going to go. Nobody knows. It's in a sideways consolidation. So these do have nicknames. This is basically just a doji. This is called a long leg doji, just a higher high and a higher low. This is called a tombstone doji, I believe. I think that's a tombstone. And it's just basically a shooting star, but in doji form. And then this is called a hanging man, I think. I might have my names a little messed up. And that is basically this, right? Just less body. And they can be applied to trends in this sense. Let's dive into real charts and examples. All right, so we're going to look at a fresh one, LIDR. What's one thing that is true about these stocks? They move in conjunction with support and resistance levels at the half and whole dollar. So, 550, for example, is a $0.50 support and resistance level, whereas $5 on the whole dollar is as well. And you can see we came up to it and rejected off of it. This is absolutely true throughout the entirety of this chart. So 450, you have another one. Pushed above it, sold below it, maintained. So half and whole dollars, very important. That's why I think a lot of people take buy and sell orders and they just put them out there to get hit whenever at the half and whole dollar levels. So where's one of my strategy examples, right? That should be sticking out to you like a sore thumb. Bam. That right there is a micro pullback if I've ever seen one. Buy right there. And just for fun, let's take a look here. If you were to buy on the strategy, lost it right there, at 470, and you just got this little pop up to the top of $5, that's 30 cents a share. 1,000 shares, 300 bucks. Bingo. Super easy. And this isn't the only one. Let's take a look here. So if we go back to the pen, you can see my strategy is there. It's there. It's also right here and here again. And they're just quick pops. You just buy and you sell, you buy and you sell. Look, here it is again. Above the 9 EMA, the gray line. How many of these are picture perfect above the 9 EMA? 1, 2, 3, 4. It's that simple, and you stay disciplined with the criteria. The other thing, a volume profile. Does this look good or bad? Look great. You have all of the green candles are outsizing your reds. That's awesome. That's what you want to see. You don't want to see these freaking humongous red candles amongst these green candles. It's a bad sign. Even if the candles themselves aren't big, but their volume is big, it's not good. Open MACD. Whenever the MACD is green and these lines are crossed on the histogram, that's a good thing. That's when your trades are going to be the most open. Float. You want under 20 million. Reason being, supply-demand imbalance. You get fresh news from an hour ago with a float under 20 million, you get big moves because there's a lot of people trying to buy a low supply. Supply-demand. Bingo. There you go. Moving on to chart patterns. Let's go back to the whiteboard. So I'm just going to get into a couple of very, very simple ones here. So you have the head and shoulders pattern, which on a 1 minute time frame in most time frames is considered bearish. So you get a move up here, pull back, move up here, drop down, move here, drop down. Head and shoulders. This can also look like this, right? It can look in different ways. You can see it like this. Like it's never just going to be a perfect mountaintop, but that's the head and shoulders pattern. So if you get this big push up, pull back, push up, drop down, retry, drop down, that's a head and shoulders pattern. Another one is the cup and handle, where you get a push, drops, kind of starts to curl back up, base out, drops, curls back up, bases out, and then takes off. On a 1 minute time frame, these are going to be candles. So you just got to visualize this as candles. I can try to find some examples, but you get, the price action doesn't fall off the face of the earth. It starts to curl, trend sideways. You get the cup, the handle, the breakout. Inverted head and shoulders pattern, a drop, a recovery, another drop, another recovery, another dip, and a rip up. Inverted head and shoulders pattern, just as it sounds. What else we got? ABCD pattern. So this is when we get a big move. You'll see this a lot in the micro pullback strategy that I trade. Dips, tries to come back up, does not quite, dips again, boom. So you got A, B, C, and D. Let me redo that. So what's crucial about this is that when you get the move up, you get your first pullback, that next move cannot exceed that level. And inversely, this next pullback cannot break that level. And then when you get that move up, it should look like that. If you go here, 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 it's not an ABCD pattern, it's just chop. I wouldn't recommend being super reliant on chart patterns themselves so much as candlestick sentiment with volume. Let's dive into level 2 data quick. This is going to be maybe difficult for some of you guys to just wrap your heads around, but we'll check it out anyway. Okay, so pull up the Webull level 2 data since that's what most of you guys use. So you see these order books here? This is my windshield, and the chart pattern is my rear view mirror. I do not just trade charts and candlesticks. I also trade the order books very intently. You can see I'm up $104 in the small account today. So how do you apply these? You want to be watching the ask and the bid, and the differential between the ask and the bid is called the spread. Now you can see this is actually moving pretty nicely right now. Right? This has already gone up, I think, 15 cents a share since we looked. And when I'm in a trade, I am staring at that ask right here, looking for it to hit levels that I want to see. What else am I looking at? I'm looking at the size of the orders. Big ones on the ask is a big seller. If you see a big seller show up, let's say 20K, and this flushes red, this is the time and sales, the tape as traders refer to it as. If the tape flushes red on a large sell order right here at the top of the order books, and it's flooding red, it's going to sell off. But if a big seller shows up and the tape starts to flood green, you'll get a little white, which is in between the spreads, you get a little red, it's going to push up. It's getting bought up. Another thing is you're staring at what kind of buy orders are you getting. So you have to train your eyes to be quick and watch this. That's why I'm locked in on this when I'm in a trade with my hands on my hotkeys. I see something, I'm in. I see something, I'm out. Just like that. So I'm looking at this out of my peripheral to see how much color action I'm seeing. I'm looking at just glancing at buy orders that are stacking up on the order books. I'm looking at the ask price mostly with just keeping an eye out for big numbers here. Limit up, limit down. That is your halt down level. If it hits that level, it's going to halt down into a circuit breaker halt. If it hits this level, it's going to halt up in a circuit breaker halt. This varies and changes depending on the price of the stock and where it closed on the previous day. Level 2 data is super, super tricky, but it's like a cheat code because you have a better idea of what's going to happen rather than just looking at a candlestick chart that is just historical data. This is the future, the candlestick charts or historical data. Get used to reading candlestick charts, and then I'm going to make a way deeper dive into level 2 data. And honestly, I just hope that you found value in this, and I hope it was helpful. So thanks for watching. Like, comment, share, whatever you got to do. Thank you.